Well, all right, all right. Finally, a good, happy day in the bond market after a week of absolute annihilation. How you guys doing? I know it's overwhelming. There's so much coming at us on a daily basis. You're not alone. I feel it absolutely too. Today's update is going to be a rather short one. We're going to go through it quickly because there's not a whole lot to chat about. We're all at the kind of the business end of all these tariffs, but we'll talk about it and tell you where I see things are at, and we'll go from there. Okay, so on the books for this week, you've noticed that I've changed every single day to tariff war bingo. Let's see which one of you had what on your bingo cards. Uh, Really, the reports that are released from an economic perspective really don't have that much weight anymore. They honestly don't, because every single day there's something new or there's something different. I will tell you, I'm watching closely this 20-year bond auction for tomorrow. There is some concern about the devaluation of the dollar, and there's also some concern about the fact that both China at 706 billion and Japan at over $1 trillion is what they hold in our U.S. Treasuries market. They own those bonds of ours. They bought those, and so there is some talk about maybe if they start to get rid of those bonds, what that will do to our bond market. I personally don't see that happening. I think that would be just like lighting a fire in your own living room. It would not be good for them as much as it wouldn't be good for us. But let's wait and see exactly what happens. If you do follow us on our Instagram account, you saw all the ups and downs from last week. We're going to talk about that for a minute. Speaking of ups and downs, the reason why there's so much stuff going on in the market is really this. Tell me any market can withstand this. And this is just on the tariff. We're still not talking about all the stuff that's happened to the CFPB, all the changes to the FHA programs, the FHFA programs. There's a tremendous amount of things that are going on in the marketplace for our industry to try and absorb. And really, it's really important that we keep ourselves educated in this industry where you're a home buyer, home seller, a builder, a realtor. This is such a strong pillar. I would argue one of the strongest pillars that holds up the ceiling of our economy. And whether you're buying or selling a home or investing in real estate, I think you got to be in the know. So we're absorbing all of these things, as you can see, that's happened from January 31 until April the 9th. What has that done to the market? Again, if you're on my Instagram, you saw this all last week as we reported to you. The market was in an absolute free fall, 56 basis points here, 66 basis point here, 50 some odd here. This one was the giant one. It was 89 basis points. Hadn't seen that in a long time. But this level of decline in value of the bond market, i.e., the availability of money to lend, we have not seen this in a long time. Right now, the bond market is very much oversold, so we're hoping that things will steady out. Today, it's up 38 basis points as I'm telling you this, which is great, as opposed to the 62 that it was down on Monday, and so on and so forth. What does that mean for rates, you ask? 675 last week, Monday, 698, call it 7. So 6 and 3/4 up to 7. Not the end of the world. If you're a home buyer in this marketplace, do not let this discourage you. There's so many different ways that we can hang your offer in order to benefit you. We just did one yesterday where the buyers saved $680 a month utilizing a 2-1 buy down instead of taking, are you ready for this, an $11,000 haircut off the price. We went back, gave the guy the full price offer, asked for $11,000 for that specific loan. That's how it worked. And it saved them 600 some odd dollars a month. So don't be afraid of these things. There's ways to counteract this. And honestly, right now, when there's so much uncertainty with the stock market, so many of those buyers having their pay inside their RSUs, their restricted stock units, their employee shares, etc., things like that. A lot of those folks might be taking a back seat right now, going, I don't know if I want to buy. That represents and presents opportunities for others that aren't necessarily relying on their stock portfolio to buy a house, if that makes sense. As always, I'm just a phone call away. Give me a call. There's no charge or obligation for having a conversation and strategizing with you. And at the very end of this, please, as always, subscribe, like, comment, share this video with other people so that way they can be in the know the way that you guys are. Hang in there. It'll all get better. Eventually it will. Okay? Chat with you soon.